Welcome back everybody. In this video, I want to show you guys how I set up my charts, what trend lines I use, what indicators I use, and how to simplify the entire process because trading and investing is very easy. The hardest part is getting the money. Setting up the charts and extrapolating information from the charts is the easy part, and I'm going to show you exactly how to do that right now. So we're going to use MSOS today as an example so I can show you guys exactly what I'm talking about. And the first thing you want to do is you want to come up here, and this is your time frame. So this represents the intervals of each candle wick, and so you want to start out in a very zoomed out look. So I like to start with the monthly right here. The monthly shows that every candle represents 1 month of price action. So the reason why I like to start with this is because now assume that there are no lines on this chart, right? So we have essentially a naked chart. You would get onto TradingView, you would go to MSOS, and this is what you would see. Immediately what you want to do when you see a chart naked is you want to add your own trend lines. And so what you do is you go here to the left, and it's the first one, you get your trend line. And what you want to do is you want to start from any point. Usually I like to start from the beginning of the chart and now try to find a lot of interactions onto this line. And so immediately my eye shows me this. It shows that we had support on this line here, but then it fell off here. We got rejected once, twice, 3 times. So this becomes a clear level of once support, now resistance. And so now you already have done a huge step understanding your chart, meaning when the price is below this line, really it doesn't do much, but when the price is above this line, chances are it's going to do a lot. But that's not strong enough to put our hard-earned money into an investment. So next, what you want to do is you want to zoom in, usually to the daily time frame. So the daily is like the bread and butter. This is where every bar represents a day of price action. And so also now this is where you get to tighten up your trend lines a little bit because now you can see even clearer right here. I might have to drag this trend line slightly a little bit lower so we actually interact with these price actions right here. Perfect. This next thing you want to look at is recently what has been happening. And the more you analyze charts and the more you analyze pattern recognition, the better you'll get at this. And so what I immediately see when I look at the recency is right here. This is what we would call a double bottom. Usually when you get a double bottom, so again, I'm going to get this horizontal line. I'm going to show you guys just simply. This is a double bottom, meaning when the price came down to this line, we didn't know anything was going to happen. But the fact that it came up and came back again to the exact same low as the other one is what we refer to as a double bottom. And that means to me that the old pattern finished and now a new pattern is developing. And so when we look at the downtrend that we've been in, this is a very optimistic sign. Getting this double bottom shows, okay, wait, we might be done with that downtrend. Now let's see what the next pattern is going to be. So again, now let's look from this point and let's do the same thing that I said before. Let's get our trend line and let's get it to interact with as much price action as we can. So I would say you got a good support here, good support here, good support here, good support here. I always like to also make a little range because you're never going to be super accurate with your lines. So you're going to click your line, you're going to clone it. Now you have the exact same trend line. And now, boom, we have a range, meaning when every time the price action comes into this range, it tends to be a good buying opportunity. So now we have set up our trend lines. We have determined that we're in a long-term downtrend. But in the short term, we've noticed that we are now in an uptrend, and that is proven by our double bottom right here. And so the next step now is my favorite step. So this is the most important step in my opinion. You have to find an indicator that helps you make the best decision, and I'm going to show you which one that is for me. So you're going to come here to your indicators, and this is the one that you want. So I have a favorite section right here. These are the ones that I really like to use. Of all of these, I will play around with a bunch, but my main favorite one is this first one. So if you don't have this added to your chart, go to indicators, make sure the author is Trader ATD, and it's 20, 50, 100, 200. What we do then is we're going to click it. It's now on our chart. And now we want to see how the price action has been related to these SMAs. What's important about these lines is each line represents a different average. So your yellow, in this case, if you don't know your legend, come up right here. It will show you your daily lines. The yellow line, it will say right there, MM20, 50, 100, 200. So now you know clearly what is what. What do those numbers mean? It means the average price within 20 days, the average price 50 days, average price 100 days, average price of 200 days. So your 200 is usually the one that takes a little longer to move because it has to take the average of 200 days, meaning that there's less variance. Whereas your yellow one will be all over the place because it only takes 20 days. So if there's a lot of volatility in the 20 days, you have crazy swings. The green one is the most important. When your price is above the 50, it's usually a positive sign. There are obviously signs to know if it's the best sign or if it's a head fake, which I'll explain a little bit later. The 20 right here is the one that's going to move around a lot. So ideally, you're not really paying too much attention to the 20, but the 20 helps you reinforce your 50. If you look at MSOS, we have our price above the 50, as well above the 100, as well as above the 200 and the 20. The scary part about this is that our price action is above all of the lines right now. Usually that isn't the best time to buy. It could still be a buying opportunity, but the risk to reward is not in your favor. Ideally, what you want to do is you want to make sure you're buying when your price is below all of the lines. So if we look back right here of July, our price was below all of our lines. But does that automatically mean it's a buying opportunity? No. This is why we put our trend lines in first, because with our trend lines, you now have levels of support that you can follow. So, okay, our price has now broken all of our SMAs, but I've also drawn this trend line. So let me wait and watch. If the price comes back here and it bounces, that's positive. That means this was the buying opportunity. And then again, if it does it again like this, where it comes back down to that same trend line and you see massive volume back up, that's confirmation that that was the time to buy. So your trend lines help you confirm your decision, and your SMAs help you pinpoint exactly when to buy. And so this is all you need to follow. And so what is the ultimate stack? The ultimate stack is the following. When you have your yellow line right here at the bottom, then your green, then your blue, then your red, and the price is below, chances are that will be your best risk to reward entry. That doesn't mean that immediately when you buy, it's going to go up. It just means that you have gotten a higher risk to reward setup. And so what is the worst risk to reward setup? It's the exact opposite. The exact opposite would look something like the yellow right here at the top, then the green, then the blue, then the red. And now the price, obviously, above all of our SMAs. If so, you buy here, your risk to reward is not in your favor, and you could see it wasn't because the price goes down. And so it really is a simple game. I'm not going to go too crazy in depth with this video. I'm not going to try to add 1,000 different indicators, 1,000 different lines, tell you to do this, do that, make my chart look like a scientific experiment. Keep it simple. The more simple you keep it, the easier it will be for you to follow, but it'll also be a lot easier for you to understand pattern recognition. You'll be able to look at a naked chart and you'll be able to make a decision. You'll be able to put the trend lines, and it makes it a lot more efficient for you. So now we have our trend line set, we have our SMAs. What else are we looking at? Okay, so now we've had everything planted out, and it's very simple when I look at this. We are clearly in a longer term downtrend. We are in a shorter term uptrend confirmed by our double bottom. And now we have to wait and watch. The SMAs right now are all between our lines. There's an inflection point here between September and October where what we're looking for a massive breakthrough would be a break of this top level of resistance. If this breaks, this thing is going to go. If it doesn't and it gets rejected, then chances are we will come back into this zone. And if we break down this zone, then this whole pattern collapses, and now you have to pivot and you have to find another trend line. In these moments, you can't rush the process. There's nothing that you can do to change the outcome of what's about to happen. This is a waiting game. You've set yourself up, you've put your trend lines in, you have your indicators, you know the thesis, you understand rescheduling, there was an executive order, so you have some sort of fundamental outlook. But the chart alone is telling me you have to wait till September, October to see where the price goes. And I've already entered this position, so it's more of a wait and watch for me. I could trade the bounces, but I do believe that a break of this top level of resistance will lead to a lot higher gains. And so that's my decision as an investor as to why I'm not taking the quick flip. And the last thing I want to say is there's a lot of people that think reading charts is a scam. People say that technical analysis is not real. People are just trying to be financial gurus, whatever it is. And I'm going to tell you guys this with the utmost confidence. There is no better tool than reading a stock chart. Fundamental analysis, reading financial reports, checking in on earnings, none of that matters. None of it matters. On your stock chart, since the existence of the company in the public market, every day is shown, every month, every week. You can literally adjust the time frames and you can figure out exactly where things are going and what's happening. What I mean by that is, if I look at MSOS, right, there's a huge gap right here on the chart. So clearly, this tells me something happened on this date. December 11th, 12th. Something was happening around that date. If you want to figure out what it was, a simple Google search, you'll figure out that was when Trump was putting the executive order in for reclassifying. So the chart gives you all the information about your company. Every earnings, how the company reacted to the earnings. So instead of going to research the company's financials and the books, I highly suggest everybody find the company you like or find a company that you're interested in, put a naked chart, start out monthly, zoom out, put some trend lines in, establish your trend lines, put your indicator. I'd suggest the SMAs, the 20, the 50, 100, 200. From that point, come up with a conclusion on your chart, identify patterns, identify a thesis, identify for you, just based on the chart, what does this mean? If the price goes above this or below this, what does it mean? So establish what your perception of your pattern is on the chart. And if you truly like the company and you say, okay, I actually want to know what they're doing, then go to their company website, go through their financials, read their reports, because then you have a better understanding of what's going on behind the scenes so that you know and you have more trust now in your chart reading. The more practice you have with it, the better you're going to get at it, the more confidence you're going to have at it, and the quicker you're going to have pattern recognition. And when you have faster pattern recognition, you can quickly look at a chart, understand, nope, this is not the time to buy it, or yep, this is the time to buy it. So anybody could tell me the greatest company on earth, they're smashing earnings, they're doing this. Show me the chart. I need to see the chart. If the chart doesn't say that it's the right time to buy, I don't care what company I'm buying, I'd rather not buy it. And so I hope all this makes sense. And I'm going to leave you guys off with this one ideology. And if you remember anything from this, remember this. Let's say you want to buy a winter jacket and you go to the store and the winter jacket is $500. If you buy it that day, no one's forcing you to buy it, but the impatience or, oh, I need that jacket today. Let's say you buy it for $500. Now there's another guy who also needs a jacket, but he's a little more patient. He's watching. And let's say 2-3 weeks out, the inventory for that jacket has depleted. Now they have one jacket left and now they're going to sell it for $50. That guy that comes in, he just bought the same jacket somebody bought for $500 for $50. So who got the best value? Obviously the guy that got it for $50. So remember that the product will never change. The company will always be the company, but you get the opportunity to pick and choose when you buy that company. And always remember that. Sometimes the company is trading at $500. Sometimes it's at $50. The company's still the same company. You just got better value. Use your charts, use your indicators, use your trend lines to buy at the best opportunity. And so this is all I got for you guys today. I'll see you guys in the next video. If you enjoyed this one, let me know in the comments. Let me know if there's anything else you guys want me to break down in the charts. But aside from that, you guys know the drill. I'll see you guys in the next one.